Android devices.
Chris Rupke is Chief Financial Officer at Bank of Tokyo Mitsubishi in New York. Good morning and welcome, Chris. If they repeat it enough, will the message sink in to the point that they don't have to worry about interest rates shooting up?
Yeah, it is beginning to be a credibility problem, isn't it? Sometimes it all stems from the fact that they want to jawbone rates lower. Bernanke has said that if interest rates remained higher, they would have to push back on that, and they did. That's why they didn't taper in September. So we're kind of interested in what bonds are doing when they made the decision not to taper in September, and it is on the table in December. 10-year yields in September were 2.85 before that meeting. So 2.85, we're very close to the levels that made them forego tapering at that time. You know, the amazing thing to me is that we continue to talk about tapering where we should really be a little more focused on raising short-term interest rates and trying to normalize rates this long after the recession. Janet Yellen has put out some research before saying, according to her view, they might not raise interest rates, short-term rates for savers, until 2016. That means rates...
All right, let's stop it right there. Hello and welcome in from Sunnyvale, California. I'm Mark Vierra. This is my basic analysis video for the week, and it's a complement to my weekly trading log on HotStockMarket.com. I make no recommendations to buy. I'm just sharing with you some technical analysis for those that are interested in learning where to get information and you know, how it applies to trading platform I'm using is Thinkorswim. And if you're new to my videos, YouTube, I provide links to all of this stuff. You'll find lots of information in there. So let's get started here. Go right into the charts. Monthly chart. Drawing some trend lines in here. Okay. Keep your eye on this one right here. This is tagged multiple highs. So I'm looking at that as a key pivot. And if I zoom in here, these are the levels I'm watching. Definitely I'll be looking at this green dash for support. And this is a long-term chart, so get into philosophy of time frames. The further out you go in time, you're going to see, I don't know if I want to say less accuracy, but I don't want to get too far into the theory behind that, but definitely you have to be mindful of the time frame chart that you're looking at, okay? And that plays an important role. Now, this is a blast from the past here, and I drew this chart a long time ago. And one of the things I want to point out is how these pivots are so important is you can see price came down and reacted with this trend line. Okay, just amazing here that this target is actually about to be achieved. Another one here that it's kind of laughed at it. Stock twits. Somebody said I was dreaming. But these are the multiple necklines that I've drawn in over a period of time. And I started, this was the first neckline I drew in, hit that target, and you know, quite possibly could see these targets achieved in the future. So that's what I've got for monthly charts. We've got a closed monthly candle. You know, this is what our candle looks like for the month closed. And let's move on. On the weekly front, let's look at okay, just zooming out here so you can see where these trend lines I've drawn. This is a pretty pretty solid pivot. It's a freehand drawn, but I like how price has reacted in here. But I want to zoom in, and I threw some other trend lines in here. This would be your near-term support, and price is reacting to this key pivot yellow dash. Above that would be bullish and a new trading range. Also looking at the candle spread has declined, and now this week, of course, you could write a lot of that off to the light trading volume, but regardless, we have a doji, which I consider a type of upthrust candle. It means indecision, but I look at it, it's a sign of weakness in that there is lack of demand going on here. And our extension, okay, this is a Fibonacci numbers are interesting on how price reacts to Fibonacci. It's quite the phenomena. Now, I want to point out that I don't put stock in any particular study. It's just you gather these facts, and then the more that a study would agree with another study, you know, that sort of like a detective putting all the clues together, and you look at how the story has unfolded. And I'm looking at this 161 Fibonacci extension and support at the $1.25 down here. Okay. Since there was some indecision and what I do consider a type of upthrust, when I do see the market is declining, or I think it might decline, I'll throw in a retracement from the low. So this is a Fibonacci retracement, and I get a 1774 would be your first support, and of course the further down that you go on these levels, you'll get stronger support. That's the weekly Fibonacci retracement. This is a weekly flag that we're still waiting for a target to be achieved on this. Doesn't have to be anytime soon, but it's a chart pattern I'm watching. On the daily charts, nice channel. Could actually throw some more lines in here, but I want to just clean things up to what I feel is the most important. Another very loose, subjective, kind of freehand pivotal line that I've drawn in here. Let's zoom in. And I've thrown in some extra lines here. This is kind of tagging an average of the highs and sort of a rising wedge going on in here. We'll get more into chart patterns, but on the daily this past week, this is almost I kind of would look at this as a gravestone, following the same kind of psychology. It's another type of doji, and the gravestone doji, the psychology being that it went up, hit resistance, lack of demand, and it's closing more on its lows down here. And the same kind of thing here. We got a little bit of a body. What's important though is, this type of pivot that has struck these highs. Now price poked above, fell below, above, and we're tightening into this coiling type of pattern I'll get into later. But I think it's important that we have broken below. This is a very important key level here that I'm watching. And we'll get more into the rising wedge chart pattern. What else have I got? Regression channel. We're at the upper end of the channel. This is interesting. This is Andrew's pitchfork study. Getting some sideways action and reaction to the center pivot in this pitchfork channel. Moving averages, we're still rising. I see the Bollinger Band has contracted, but we're still hugging the upper end of the Bollinger Band. We're 20 handles from the 20-day moving average and 63 handles from the 50-day moving average. All of these things have significance. Don't read too much into it, but near-term daily Fibonacci extension, we have grown past the 50, and we're reacting now with the 78% Fibonacci extension level. And I threw another retracement in here on this upthrust candle, and I would say we are sitting right at the 23%. First support, I think we're going to see 1800 level would be your key psychological. I'm going to find strong support in there, I believe. And air is something interesting. Now, I'm going to provide a link to this URL here. Ichibomb candle oscillator. He writes his own code, and he is giving us this indicator out here for free. And I've been just kind of playing around with it, watching it. And interesting thing to note is it's breaking down below these oscillating lines. I'm sure he could tell you a lot more about it, but I thought this was just kind of interesting divergence going on here. And, how much does that mean? I don't know, but I'll provide you a link. You can check out the source code to that and add that to your Thinkorswim platform if you like. Chart patterns. Here we go. Going back, let's go back to, we had VTOP striking the, actually forcing me to move this rising wedge trend line up a bit. I left the dashed in there to show the pivot. The VTOP, we struck the bottom of the trend line support on the rising wedge, kind of forming what you would call a cup, and here would be the handle, would be this flag. The flag actually has a higher percentage of meeting price target. So instead of adding measurements, I'll get into, I put some measurements for this bullish flag, which is actually breaking, it popped up above the flag, and oftentimes you'll hear me say where the first move out of a pattern is usually the false move. That's just kind of my old tinfoil hat theories, but I see it happen a lot. So we'll see if this flag actually doesn't play to the downside. So again, let's see what I wrote in here. Week closing with small up thrust following gravestone doji. We had a bullish but inside candle. It never went outside the previous candle range. And then this up thrust here to end the week. Back half of the year, we're almost at a 30% for the year. I can't imagine that there isn't going to be some kind of booking profits at the end of the year, but that would fall more into a fundamental analysis, and I'm just going to try to keep to the charts in this video. Now, another interesting thing is this rising wedge, as price is coiling into the vertex. So undoubtedly, we're going to see some sort of move, up or down. My guess is down. I think we'll see maybe some more up thrusting this week, and I'm expecting some downside and get more into volume. So here's the measurements I drew. This is a flag high and tight. We could see, an 1830, 1829 marker. That would be, the target price. This previous flag is 1820. So, a couple of flags that I'm watching. Here's measurements on the rising wedge. Upward breakout would give me a price target of 1917. Downward 1743. Which actually kind of coincides with this earlier wolf wave that I'm not sure I'm giving up on yet. Now, I also want to speak about these multipliers I'm using. You take measurements for the rising wedge, you go to the highs and you subtract from the lows, and now you could add that equidistance measurement to the vertex or wherever the breakout point. I'm putting this number here, 1820, because it's the vertex. could very well be that the number, it might strike below here or strike above here, and then I would readjust that number in that event. You just don't know when it's going to break up or down. But the multiplier I'm using is giving me a conservative target, and that's kind of, I prefer to go with something that's more attainable type of goal than an equidistant. Of course, now if I do meet this target, then I would look to see if the equidistance has relevance. Pattern targets, holy cow, 1900. Could it happen? I think it can. You know, it all depends on, of course, the fundamentals of the market, and you know, 30%, is it a bubble? I think so. But yeah, we'll see what happens. Now let's get into some volume. Interesting things going on with these volume nodes. This volume node, I believe, is going to be a key pivot. We've got really at this price, at you know, I want to point out that price is at resistance, and you have a declining volume at that price, a smaller volume. Here you have more volume at this price, and then of course your point of control is down here. That means that your main activity and what point of control would be your fair price, or where most of the shares are exchanging hands. And you see what's going on here is the lower the price, of course, you're going to have more demand entering the market, less supply and demand. And this is one of my reasons for being near-term bearish on the markets, is it's just not enough attractiveness at the volume by price levels. And I do believe we're going to see a break below this pivot. We're going to break below this support that I've drawn in here, and look to the next volume node to react to. I think this volume node here looks like it would be an ideal candidate for this point of control to temporarily move up to. So, and again, we got light volume, this declining volume as price is moving up, and you can kind of see that our oscillator down here is, we're getting lower highs on our oscillator with higher highs, is a very kind of slight divergence to the bearish side. So this is important evidence that I'm looking at here. The other thing now, and I have to really shrink myself down, is this candle here. The closing of the week, volume increased on the intraday level now, that would coincide with a previous, you know, this is kind of a really short-term climax, but this is a selling climax nonetheless. Volume peaked up to this level, and I'm seeing the same thing in just this one intraday candle, bringing it down to the this would be your 10-day point of control. I think is very important to note that supply caught up with demand on this volume surge. And you can also see the bearish divergence even a little bit more here. So that's some pretty good evidence here, I think, in the intraday, confirming along, you know, you get different time frame charts agreeing with each other. That builds the confidence in your analysis. Simple as that. What else do I have here? The daily, this is a 3-month daily monkey bars. This is what the Thinkorswim platform calls a volume profile. These highlighted areas, this is 70% of the trading that's going on for that. These are in month-long time frames. So here's where our playground area is, what it's called, for the month. And notice how flat it is here compared to this larger one. Slight gap between the two as it was getting into this parabolic mode. And now this week we're seeing sideways action to counter that parabolic. I see it as a sign of weakness. Again, I'm pointing out the same volume node in here, and being outside of this playground area is what the playground areas emphasize. I think that I am leaning for this to pop back down into the playground area, and this would be another reason why I think the point of control will be moving up to this next volume node. Is it happens to be the same, this monkey bar is the point of control for the playground area, if I'm articulating that correctly. That makes sense. Means that most of the shares in this time frame here, this month-long time frame, are going on at this price level. That's 177. Right below that is this volume node that's poking out. I think we're going to see a lot of activity at that level. I do believe we will see a return of price to these levels. What else can I show you in here? Also the same volume decline. Really light volume on a daily. This is just anemic volume. And my respect to the holiday light volume, I do think it has meaning. Now, what else can we go in here? And I'm just pointing out the same volume spike here and looking at how it broke below the playground area. This is a 10-day chart, and these are hourly profile. The playground area these are all 1-day playground areas. And the one thing to note now is not only did price pop back down to this point of control, but it's also at the lower end of the playground. So I think we're seeing a little bit of climax rearing its head. We'll have to see how this week unfolds. The VIX, seeing a little bit, this is a weekly VIX chart, seeing a little bit of reaction down here in the complacency levels. What I'm looking at here is that treasuries have been correlating somewhat positive. You see the S&P is climbing, and I wrote in US dollar here. Oh, that's a mistake. This should say TLT is a 20-year US Treasury ETF. I see an error in one of my charts I need to fix. In any case, Treasuries correlating positive is it's an interesting change to the normal. Usually you have stocks are risk on, and U.S. Treasuries is where money would flow when people are jittery, there's global uncertainty, or what have you. But I think what you have is, fundamentally speaking, you have the Fed that's going to taper back bond purchases. So that means less demand for U.S. Treasuries. So right now you're seeing really the only option for safety is cold hard cash. The U.S. dollar has been resilient, and it's holding up in the face of Fed intervention. So I get into more of that in my log. So I guess what I'm trying to point out here is that I think U.S. Treasuries are going to be weak and remain relatively stable in the future here, near-term future. I do think that the decline in the bond market is telling us that there is bubble. Excuse me, 30% climb in the market. I don't know. That's quite an extreme amount for stocks to climb in any given year, really. Now here is the yield. This is a thorn in the stock market side, and you can see getting up here almost to the 4% on the 30-year yield is, stocks are going to, as yield climbs, is more incentive to get out of stocks and into bonds. So we'll have to see how that plays out with, less demand in bonds if the Fed tapers purchases. it's going to be interesting to see what happens in the bond market. But here, yield climbing is not good for stocks. This is another correlation chart. This is showing the climb in the U.S. In the S&P 500, and just resiliency in the U.S. dollar actually holding up against the aforementioned intervention from the Fed. It's holding its ground pretty well, is what I wrote here, and I think that is something interesting to note. And the euro, seeing lots of upthrust candles going on in here. I think that the euro's losing some steam, declining volume, some bearish divergence going on. I would love to see the euro get up to $1.37. I think that would just be great, opportunity to sell the euro. So that's the charts that I have for this week. Again, you can check out my trading log at HotStockMarket.com. I'm going to provide some links in the group section, and there's all these various topics here in different groups, and I'm going to leave you a link here. This is where you can find this candle oscillator that I mentioned, and then you'll be able to find my trading log. I'll put links to all this in the YouTube. So that's it for this week, and safe trading out there, and I will see you on the boards. Oh, one last thing before I go, I just want to mention Reddit, subreddit StockMarket, also a good place to find some information. That's it, and I will see you next week.